Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers. I'm here with Australia's #1 mortgage broker. You're probably not tired of me saying that just yet. Chris Bates. How's it going, Chris?
Doing well, Pete. Happy New Year. Obviously, it's not New Year, but we're pretending it is. But we're going to do a bit of review of 24, what to expect for 25. And I hope you have had a good New Year. Looking forward to recording this over 2025. It's going to be a big year, right? I mean, got an election just a few months away. There's obviously going to potentially be some rate cuts. It's just going to be another chapter in the story of residential property in Australia. Another year of learnings, to be honest, how the market adapts to a new norm, which is always exciting time of the year to see what happens.
We're actually recording this before Christmas. I'll have to pretend I've just had my Christmas dinner or New Year's Eve party, which probably won't be much, to be honest. But yeah, this will go to air in the new year, I think. So let's project ahead. It's been a funny year, hasn't it? So what have we seen, or what are the major things that we've seen in 2024? Do you think, Chris?
Oh, look, I mean, you got a hats off to people who have been in the Perth and the Adelaide and the Brisbane market. I mean, even though rates have been 6+%, I mean, 20% growth in Perth, and parts of Perth would have risen a lot more than that. Particularly if you're in the housing market, particularly if you're in the better streets, and some areas that have gentrified a bit over that time. What's interesting about Perth, it hasn't also been the high end that's outperformed. And that's one of the things I think is interesting over the whole year is that due to high rates, push budgets down, and the medium and then the lower end of the markets actually outperformed the top end. That's not usually the case, right, Pete?
Well, that's the funny thing, isn't it? You would say, I suppose this is where you talk about level 1 and level 2 thinking. At face value, you'd say, okay, well, mortgage rates have gone, let's say, from 2% to maybe 6.5%, and therefore you would think at the top end of the market, that's going to really impact because people can't borrow as much. But I think actually, in some ways, the premium market has been a surprise because I suppose a lot of the people in that market actually aren't that heavily leveraged anyway. There's inherited wealth and there's been a real dearth of listings. I've had some clients in Perth who've been looking to upgrade, for example. They just can't find anything to buy. It's taken half the year to actually find decent stock. So, yeah, it's been a mixed kind of market, and investors, we started the year saying investors would be selling up, and that did seem to be the case, especially in Victoria. But then if you look at the new lending to investors, it's up about 30% over the year, and that's in spite of higher interest rates. So yeah, even though, like at face value, you'd say lower borrowing capacities, it's going to impact this, that, and the other, it actually hasn't quite worked out as you might have expected. As you say, Perth and Adelaide have boomed. Brisbane stock listings have been really low, and that's just continued to power the market with high population growth. Actually, really, the whole of southeast Queensland in a lot of locations. So, yeah, I think the interest rate movements through the year haven't impacted the market exactly as you might have expected probably 12 months ago.
Yeah, I mean, overall, when you look at median days on the market over the year, they haven't really blown out. They've been pretty level across the regions, circa 40 days. I mean, in the capitals, maybe 30, 25 days. It's a pretty tight market. New listings are slightly higher and maybe a bit more than the last 5 years averages over the second half of 24. But the first half, it was pretty dire listings in that sort of autumn time. And I would say there's been a bit more listings than expected in the second half, but total listings are still really low. So even though listings have been coming on, they're still selling. I mean, you can look at places like Hobart listings down dramatically than they were last year, but also, the market's been pretty dire there. I mean, Darwin's looking pretty tight on listings, and there's a bit more listings in Sydney and Melbourne and Brisbane versus last year, but the prices have been holding up. I mean, that's been the story of the year, is that it's probably resilience is the word, even though rates are so high and people are absolutely under mortgage stress. So arrears rates have gone up a bit, but nowhere near as probably what you would expect if you said 2-3 years ago, we're going to go through a period where borrowing costs is going to fall 30-40%, rates are going to go from 2 to 6.5%, and they're going to stay there for a few years. You'd think there'd be a lot more debt stress in the market. But the other thing is that, I mean, the build costs and the real getting projects to stack up, that hasn't been a great year, right? It hasn't been a great year to be a developer, making money, getting jobs finished has been hard, but also starting new projects has been really hard, particularly in the unit market.
I think, I made a couple of notes here. One of the questions we were going to answer was, what did we learn in 2024 and what were some of the market challenges that were faced down? If you'd have asked me in January 2024, I probably would have said mortgage arrears would rise more than they have. But as it's turned out, it's been the most challenging year for developers. Insolvencies have hit about 3,000, which is a record high. Construction costs have really come home to roost. I think a lot of fixed price projects that were commenced earlier in the cycle are now just they've overrun so much, so we've ended up with disputes or businesses going into administration. Building approvals, they kind of picked up towards the very end of the year, but they've been extremely low, probably at the lowest level in about 12 years, at a time when we actually need loads more housing. So I think some of the biggest challenges of the year, I mean, yes, for consumers, and people have cut back on their spending in the retail sector and so on, but it's probably been the hardest year in a lot of ways for developers and people actually building homes.
Yeah, I think it's still a healthy proportion of first home buyers in the market. I think a lot of that investor growth in terms of lending is actually first home buyers that are actually buying investment properties. And you can see the real boom in the WA market. I mean, it's gone from about 20% investor lending in 2020 to 40% there. Similar in Queensland, there's still a healthy proportion of investors, and South Australia. I think Victoria is just the one that really stands out. It's been tough down there. Confidence hasn't returned. Price growth is just, and when you look at an affordability metric coming into next year, Melbourne's really lost its mojo all the way back through COVID. And I don't know, can we say Melbourne's never going to bounce back? What's your take? Do you reckon it's going to be the best place in the world to live again one day?
I think Melbourne will bounce back. I think, barely a day goes by at the moment without another article in the Fin Review about how did Victoria get into this mess? There's a debt boom in Victoria. Some of that's political, of course. But, these things are cyclical. And you could have probably said for every capital city at some stage over the past 15 years, you'd say, that particular city is really struggling and then things bounce back. I think one of the surprising data points has been business investment in Victoria has actually picked up quite significantly in recent years, completely against the narrative. So I think people generally would understand that over the next decade, Melbourne will probably be Australia's biggest city. And yes, the city can spread further and it's probably a bit easier to supply that market. But I don't think when you actually look at housing market dynamics, it's often driven much more by the supply of credit than it is by the supply of housing. So I wouldn't be at all surprised if, after a difficult few years for Melbourne, we're sooner than people might think even talking about a rebound.
Yeah, I mean, when you look at the stats, right? I mean, $11 trillion have kicked over. I mean, it wasn't that long ago. We're talking about $10 trillion in the property market. Now we're at $11 trillion. The debt is only $2.3 trillion. And there's 11.3 million dwellings out there right now. And so, that's probably another sign is that, the equity we built in the property market's been another solid year, even though the handbrake's been on. What's your sort of take coming into 2025, Pete? I mean, as rate cuts happen, that also increases borrowing capacity. Is it going to be what's seen as a headwind is now going to turn for a bit of a tailwind for prices? Or do you think that, it also needs business confidence and consumer confidence to really pick up for people to really try to leverage up again?
I think just to wrap up on Melbourne, I think the key thing is relative affordability. I think why did Adelaide tee off in recent years? It's because you could buy a beachside home for probably half the price that you could in other capital cities. And people started saying, well, why not move to Adelaide or even invest in Adelaide? And I think Sydney house prices have shot up over the past 4 years, much more so than has been the case in Melbourne. And if it gets to the point for a family where they can buy a suburban family home in Melbourne versus just not being able to in Sydney, eventually that reaches a breaking point, and then people start moving to Victoria. So I think that's what will drive the rebound ultimately. Yeah, I think looking ahead to 2025, of course it's a fool's errand to try and predict where interest rates will go, but I'm going to do it anyway. I think if you were to make a stab at a neutral real rate of interest, it might be around, look, there's different models out there, but it might be around 1%. So if you add that to the inflation target of 2.5%, if I had to guess where interest rates will get to in this cycle, about 3.5%. So that implies maybe 3 interest rate cuts. How and when they come about, I don't know. But there's another factor as well, and that's that we've had very tight lending conditions for various reasons in recent times. And at some point, APRA may be under pressure to release that 3 percentage points buffer. So I think the interest rate will be one factor. I think banks will be getting keen to start lending again. So they'll look for more creative ways to start lending. I saw it was in the news recently that Pepper is now offering 40-year loan terms. It's just, it's not a big issue per se, but it's just a sign of the times. So I think a combination of more bank competition, lower interest rates, and probably a lower lending assessment buffer. So I think all of those things will be a tailwind for the housing market ultimately in 2025.
Yeah, and I do think there's this pressure to be back in the city, the return to work is going to suck people to compete on a small number of properties around the city. I was just reading an SMH article that, the most popular places in 2024 was a lot of the inner west locations of Sydney, and that sort of aligns to what we see on the ground as well. Typically in 21, 22, a lot of people were looking to, go to the Central Coasters, the North Wollongongs, north of Hornsby, etc. But I feel like a lot of people are, just wanting to get something that suits what they need now and for the next 5 years, something a bit closer to the city rather than make big lifestyle moves. I mean, are you seeing the same, Pete?
I think so, yeah. I mean, we can actually see it firsthand in the Sunshine Coast because it's the mirror image of what happened in 2020 and 21 when people were just rushing up to get to the coastal locations. It hasn't fully reversed, but clearly things are a lot softer than they were. And in some areas, we've seen prices and rents off about 20% from where they were. Of course, they did go to borderline insane levels for a little period there, so it's not completely surprising. But there does seem to be sort of a general reversal back towards the office, back towards the city. So if I was looking at areas or regions in Australia that might offer some value or opportunities in 2025, Melbourne is an obvious one. I've seen a lot of online chat about Darwin. I don't know about Darwin. It's a funny place up there. I used to live in the Northern Territory, and I wouldn't like to try and predict it because it's a wild housing market there at the best of times. But probably, there's probably some more value in some of those markets that have come off a bit as well, potentially like Newcastle, Sunshine Coast. But if I had to pick probably the favourite place for investors to be scouting for deals in 2025, it would most likely be Melbourne and Victoria.
Yeah, it's going to be interesting to see what happens up. There's been a lot of changes with government rules around, particularly in Victoria, around Airbnb and land tax and vacancy tax. There's been lots happening down there, a lot happening in New South Wales around zoning changes. I think that's going to be one story I'm going to track very closely next year is what happens with Chris Minns and the government and the zoning changes and what actually gets approved. And what actually gets commenced, right? Where developers go to actually make some money in this tight market. And I think it's pretty exciting to see how that plays out. It's a good little insight to how the city's going to evolve over the next couple of decades, not just over the next couple of years. What are you sort of looking at for next year, Pete? What's some interesting sort of trends?
Well, you mentioned it's an election year, so that will always bring forward some interesting policies. The coalition wants to run on access to superannuation for housing deposits. I mean, obviously that's a demand side measure which would sort of boost the market. Labor's sort of more keen on the build to rent market, which kind of runs in parallel with what goes on in the established market. I think probably the interesting thing to watch will be what happens with immigration policy. I think things will naturally come back to a more sustainable level anyway. in 2025 as the labour market softens and the sort of snapback in students and backpackers kind of levels off. But I wonder whether there might be some potential changes to the net overseas migration cap, for example. Might be an obvious thing for the opposition to run on. They're sort of a bit cagey about what the policy might be, but I think maybe just generally population growth might be a bit lower in 2025, maybe back to a bit more of a sustainable level.
Yeah, do you see this rental crisis continuing, Pete? Because I mean, it seems like rents are rolling over and aren't increasing at the rate they were over the last couple of years, which it's not great, right? It's not great when A, you can't rent something, and B, your rent's going up dramatically, and then you're getting kicked out and your rent's going up. It's we do need a real stable, steady rental market. There's definitely a bit of build to rent happening, but that's a drop in the ocean. I mean, there's potentially 30,000 build to rents happening. There's been some legislation changes with taxes in the last couple of weeks, which has been good news, I think, for that. But when you got 11 plus million dwellings, what's 30,000 dwellings? And so I can see this rental crisis really continuing into next year, where investors buy in areas that old investors didn't buy, and there's a reallocation of where you can and can't rent.
I think, yes, if you look at the rental price inflation, that does seem to have leveled off. But of course, the level of rents is probably 40% higher than where it was at the start of the pandemic. So it's that sort of inflation rate versus level debate again. I think there's a seasonal aspect to some of this, and we're coming. This is a busy sort of time of year in summer in Australia, so things might be tightening up again. I think one of the lessons I think from recent years should be the population is much more flexible or malleable than we tend to think it is, and people can, if rents are high, they will look at alternatives. They'll probably go for potentially a cheaper property, a smaller one. I think the increasing use of share housing is coming back again and things like that. So I don't know necessarily we'll see a spike in rents again, but I just don't think that sort of structural undersupply of dwellings is going to be tackled for at least a couple of years, just based on the sheer number of people coming into the country and the lack of completions. It looks like over the past year, maybe we've sort of constructed around 160,000 dwellings. It's just not enough, really, considering how quickly the population has grown.
Yeah, absolutely. Is there any sort of thing globally, Pete, that obviously we had the Trump election? We're not too sure how that's going to play out, but anything globally you think that we need to be worried about? There's always these sort of black swan events that, can change. I mean, is it the trade wars with Trump and China? Is it, the wars over in Ukraine continuing and shocks to our oil prices, or anything that you think that could happen in 25 where, it could have a huge impact on our market here?
Yeah, it's an unpredictable one, isn't it? So Trump being an unpredictable president anyway at the best of times. So geopolitically, pretty difficult to know what happens. I think the big thing, the big known issue at the moment is the tariffs. So I think if you take that at face value, that's negative for China's economy, and in turn for Australia, because we do supply a huge amount of iron ore and coal and so on, and key commodities to China. So I guess it could certainly have a negative impact on commodity prices and therefore national income for Australia. But I mean, that's kind of what is known about. What is always tricky to anticipate is those kind of unpredictable black swan type events. I mean, at the moment, as you said, oil prices have been quite benign. So that's one potential shock, and that could tee off a new round of inflation, for example. But I guess if you think about Trump 1.0, it was pretty unpredictable then. So I don't think much will have changed in that regard. So I think in terms of risks or pitfalls for next year, I would not bank on interest rate cuts. I would treat them as a bonus if they come for people with a mortgage. Just maybe keep a buffer in place in case that doesn't play out. I think if you're an investor in the market, I'll just be a bit cautious around new builds. I think there's going to be a big rush to push new housing supply, which we've seen in the previous cycle that led to a lot of defects. But it's a quite risky time anyway at the moment for new builds because there's so many developers going insolvent or falling into administration. So there's a couple of risks there to keep an eye out for as well.
Yeah, what's your thoughts on maybe a headwind at the moment is a bit of job insecurity, bonuses aren't there, particularly layoffs in like tech industry, a few months ago, etc. So there was a little bit of apprehension in terms of, transacting and trying to take on debt, and compared to say a couple of years ago when money was flying around and bonuses were coming. Do you think that, Pete, that when business confidence start to come back and businesses start investing and start competing for talent, you might start to see a little bit of a headwind now turn into a bit of a tailwind and buyers wanting to leverage up again?
I think you've probably seen that at the coalface more than I have, because I think the first port of call for somebody thinking about buying a first home or upgrading is they go to the mortgage broker first. And I think we've already seen some people saying, well, maybe next year I won't get a bonus, or maybe there's a chance of a redundancy. So I think, that hasn't been an issue for the past couple of years, but maybe it will start to be in 2025, just a bit less job certainty. I've always been a sort of a natural born optimist, and I think, I worry about the future next year and the year after, but not everybody thinks in the same way. And some people will be a bit more cautious as a result of that, I would think.
Yeah, I wonder, since our renovations bounced back this year, we've absolutely seen an increase in clients wanting to do that. I mean, part because they can't upgrade, and two, they have really need to do something, right? The kids are getting bigger, they're running out of space. But I do think the attitude towards renovations may be going to be dialed back a bit. Maybe it's a little bit about building it for what we need, and rather than absolutely building everything that we want, people are naturally going to have to make. So maybe my budget's 600, let's say, and that would have built me everything I wanted a few years ago, but I've still got 600 budget, but I can only build what 400 could have built, a couple of years ago. I can think of some clients that have had to scale back their renovations plans, but they're absolutely still renovating, right? So maybe that's going to be a trend coming in, and maybe it's sustainability push with running costs and energy prices. Maybe people are a little bit going to make a bit more wiser choices there rather than they have in the past.
Yeah, it's a bit of an issue close to home, because I'm just at the moment running through some projected renovation figures, because we're looking to add either 1 or 2 bedrooms and a bathroom to our place, and I'm looking at the numbers. It's not cheap, because with the cost of construction, there is a risk of overcapitalizing it, because you think, am I really going to be adding that much value compared to what I'm spending on the reno? So that's definitely a challenge at the moment, because I'm looking at these numbers thinking, well, okay, the reno's not cheap. Is it really going to add that much value to the home? Probably not. But I guess not everything is a purely financial decision when you need more space. See, our kids are growing very rapidly and we need a bit more room. So, I guess that's an issue that's close. There's going to be an issue for me in 2025 myself. So I might have to post a few pictures on Instagram. But I guess just to wrap up on this year, Chris, if you had to sum it up in a word, I guess you've already told us. I guess resilience would be yours. But I guess how would you sort of summarize 2024?
Oh, look, I do think there's it's been a year of learnings for someone who's tracking the market. And I do think that understanding intergenerational wealth more and more, understanding how people are structurally going to be stuck in their homes longer and longer, and the understanding the development market more and more is been some learnings for myself. And and it's not as black and white. Interest rates go up, borrowing capacities fall. It doesn't mean the prices are just so interlinked to that. And that's been a bit of a learning, because every time a market goes through, a 2018, 2019, you get some learnings from it. It doesn't mean that those learnings are always going to play out exactly like that, but you can see how the market reacts to different conditions. And it's going to be interesting to see how we go into 2025 and how quick sentiment comes back. I got a snapshot of that about 2 months ago in September, and I was like, the rate expectations and confidence really increased fast, and we saw the market, buyers react almost instantaneously. And so, while sentiment's low now, I'm sort of knowing that it could change very quickly, where all of a sudden people are wanting to enter the market. There's a little bit of FOMO coming in, and if I don't get in now, I won't get in. And all of a sudden you can see a little bit of a boom conditions. I'm talking in the Sydney market, and it's going to be interesting to see how Melbourne reacts. Personally, that's something I'm going to be watching closely. I've got properties down there. My sister, my dad lives down there, and yeah, I do love that market as a city. I just think it's had a tough run, right? But I've still got faith in it. So let's see how we go.
Yeah, definitely. I think, I've got one property in Victoria myself, and I had a land tax bill land on my lap a week or two ago, which was interesting. But yes, there's been some challenges down there for sure. But I know we have some gentle ribbing online with Stuart Weems and others. But we always love our week down there for the grand final. It's a great city. So I think for 2025, I'll just share one little insight. I recently went to watch at Fortitude Valley at the music hall there. I went to watch Chris Williamson from the Modern Wisdom podcast. And one of his recommendations was to read a book called Turning Pro by Stephen Pressfield, which I dutifully did, or I actually listened to it as an audio book on a long haul flight. And I took away some interesting insights from that. And I actually thought for me in 2025, I think that is something I'm really keen to do, is actually to be more professional in terms of budgeting and strategy. I've been a sort of a big picture sort of a person, really. That's just my nature. I don't get too bogged down in detail sometimes when I'm looking at my strategy, but I'm definitely keen to sort of follow that advice and be a bit more judgmental, or just be a bit more strategic in terms of my property market and investment approach in 2025. So if that was my tip for next year, I would probably say, get yourself a property plan done, write down your strategy and try and map out a budget and a borrowing strategy and a property investment plan. So it's great to follow Chris Williamson if you don't listen to that podcast already, Modern Wisdom. And that was my key takeaway from the last few weeks and my plan for 2025.
Well, hopefully Liverpool win the league this year, and hopefully we're still top of the league in 3 weeks' time when
looking
we're
good
going to live. Yeah, and I'm still kicking on with my health goals this year. That's probably the personal thing, is I've had a drink for 2 years, unless I cracked over Christmas. So let's see. But also it's about trying to win the technology battle. That's going to be my challenge next year. Is how do I, get a much better control of the technology in our lives and mobile phones, so I can be much more present with my family and my kids, and win that battle. It's going to be interesting to see. I'll keep you guys up to date, but I think it's it'll free up a lot of time for myself to focus on some other things as well. But I know the addiction's so strong with all of us out there, right? And so it's going to be interesting to see how strong it is and how my brain reacts when I start really creating more and more boundaries between technology and myself. So
I think that's the hardest thing, right? When you're self-employed, you can always justify looking at another news article, another email, another this and another that. But it's, I guess, trying to draw that boundary between work and play and leisure time, because it's actually really difficult when you're running your own business. That's a challenge for me too. Plus, we're getting our kids iPads for Christmas for that very same reason, to try and say, right, this is the time when you do your learning and your iPad stuff, but then when you're not on there, you're not playing around with other people's phones and doing this, that, and the other. So I think that's a challenge for all families, to be honest, Chris. It's not just you. But don't mention the football. I'm actually sneaking in another trip to Tottenham Hotspur Stadium before I get back to Noosa. So I'm not going to mention the 11th place in the league, though, because that's been a bit of a mixed season for Postecoglou and the boys. So, we'll not mention the football too much. I think it's going to be a big year in 2025. A lot of plans for business and for leisure as well. Got some trips planned. I'm really looking forward to it. And Happy New Year to you, Chris, and everyone else listening.
And we'll chat in the new year. Thanks for listening, everybody. And send your questions through. If there's anyone you want us to interview this year, we're not going anywhere, and we're going to cover it week by week as the year unfolds. Thanks for listening, and Happy New Year.
Cheers.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.